about to see the entry into gold. What we're looking for then in gold is the pullback towards the top of the range. Now, the pullback towards the top of the range, what we're looking for is the market to fall back to around about 55, 56. That's where the entry is going to come from. And then the move up towards 1969. Fingers crossed now. This is going to allow us to keep on going. So I'll try and indicate over there. Okay, we are back in business. So now he's looking at gold. Now, what he's waiting for here is the market to fall back and it to stabilize. Once the gold stabilizes, that shows you that yes, people are still willing to buy. Now, remember what I said, there's a lot of people who are short just below here who are now going to likely get forced out of the trade. So as the 2-year continues to hold up, now looking at gold, you see the black cursor's gone over towards gold. Gets into position. What he's looking at here then is gold has fallen down towards this area of low volume and it's now starting to move away. So he's happy to then get into the gold trade. The next part of the gold trade is waiting for momentum. Once the momentum comes, and that's something we'll be covering more and more next week, looking at understanding very, very small time frames, scalp skill sets to improve trades. What he's got now is gold still just steadily ticking up. There's no reason to do too much on this just at the moment, but you'll see in a moment all ladders start to tick up together. When that comes, that's the indication to then go and add on to the trade. And it's not that it's all about the way he enters here. The reason for the entry is because the understanding of structure and position, that's where the edge comes from. The skill to improve your entries is something that comes from understanding order flow. Ultimately, that's what gives you the ability to leverage a trade up. But once it picks up that pace, the move is on. And like I said, you could see this coming beforehand. You knew that there was a high chance this was going to be a very swift, very smooth move up. As such, you've got this jump 63 trade. It continues onwards towards the upside. The target on this trade is 69. That's what you're going to be after on this trade. So there we go, 67 trade. It's just scaling out as the market ticks higher. Then you're up towards 69. Again, as the market starts to dip back, cuts a bit more of the trade out. So the whole point that I'm trying to make here is that trade is not because he just suddenly saw something happen. That trade has come from the fact that understanding structure, understanding positioning is what gives you the ability to take that trade with conviction, to execute it, to add on to the trade, and to take a 100-tick move in around about a minute. That's what you're after. So that's the area where you can gain a huge amount of edge on understanding structure, understanding where people are positioned.